Hi, what's the traditional way of making money at stock market? It's pretty simple. You buy a share at a lesser price and you sell at a higher price. You get the profit. So you will be making profit at stock market when the stock market is bullish. Buying at lesser price, you think the stock market would go up, the stock market goes up, your share price goes up, you make a profit. And in this case, when you're selling a share, you first own the share. So normal players, they make profit like this. But seasoned players, they do something else. Even when the stock market goes down, they still make money. How do they do it? They do through a concept called short selling. What is short selling? In short selling, we first sell and then we buy. How is that possible? So in traditional selling, we first own, we first possess, then we sell. In short selling, we first sell at a higher price and later buy at a lower price. So how do we do it? Suppose I am an investor. I think that today evening the stock market is going to go down. Maybe because of any reason. See, maybe there is a bomb blast. Maybe there is another wave of COVID coming up. So I think stock market is going to go down by today evening. So what I do? I sell a share. How do I sell a share without owning it? I will borrow the share from the broker. So from the broker, I borrow a share and say at that time the price of share is 2000 rupees. And in the evening, the stock market goes down. Hence, the share price, or the price of the share bought by me, it goes to 1500. That time I buy it. I'm squaring up the deal. I'm selling first at 2000. I'm buying later at 1500 rupees. I'm returning the share to the broker. I have a margin of 500 rupees. So I'm making profit when the stock market is bearish also. That is what is called short selling. That is selling first, buying later. Alright? But it's also possible, my prediction, it goes wrong. That the stock market, instead of going down, it goes up in the evening. I had bought a share, I had sold a share for 2000 rupees. And in the evening, the stock market goes up and my share price comes to 2500 rupees. In this case, I'll have to buy at 2500 rupees. I'll have to make a loss of 500 rupees. In this case, I do not have an option of holding on to the transaction. I'll have to complete the transaction the same day. That is, if I'm selling in a day, I'll have to buy in the same day, either at a lesser price or at a higher price. Totally depends. If I do not do it, if I do not buy by the end of the day, by the time the market closes at 3:30, then there will be hefty penalty